It's 4 o'clock. And I think we should get this party started so we don't take too much of your time. Rex, are you there?
Yep. Yep, I'm here.
All right, cool. All right, everybody, thank you for joining Rex of Us and me in this chat. Rex of Us reached out to me the other day and asked if we could chat to just catch him up on everything that's been changing since the sentiment started. And I said, sure. And then I thought it might be something that's helpful for everybody to listen to. So Rex of Us was the inspiration for this. So here's some guidelines for this chat so that we don't overwhelm each other with conversation. Rex requested it, so he's the guy asking the questions. Hey, a word. I am not an employee of Cindicator. I love Cindicator. I've been using their products for years. I think they're terrific. I'm giving away my signals and this knowledge. So because I'm giving it away, I have no responsibility. If you feel inclined to send a little bit of BTC to me as a tip, that would be wonderful. I'm not asking for it. Others have done that, and they suggested I make it easy for others to do it. So here's my Bitcoin address for tips. Nothing is expected. Anything is appreciated. So that's all I'll say about that. Hey, many other people in the Syndicator's macro sentiment chat offer a lot of help and advice and make things enjoyable. We've got a great group. So I'm just adding these names, threw it up here. Wanted to see some names. There's a lot more people that help out. There we go. These are the topics we're going to cover today. What are the macro sentiments? What is the Calvin strategy? How does the Calvin strategy work? How does one implement it? And then we'll look at some trading view charts of the strategy in action and then some questions. But tell you what, you guys know me. I've been a presence on the chat for a long time. I want to give Rex a minute or two to introduce himself and to explain why he wanted to have this chat, if they'd be okay. So Rex, can you open up your mic and chime in?
Sure. Yeah. So, all right. Yeah. Thanks a lot. Just a little background on myself. I first became involved with Cindicator. I want to say either very late 2017 or early, the very beginning of 2018. And right away I was very interested in Syndicator's crowdsourcing of wisdom, and I personally undertook the endeavor of collecting every syndicator indicator that I received as a token holder, and analyzing in a spreadsheet the accuracy and then trying to perform analytics on top of the results that I was seeing to see if it was possible to learn when indicators were most likely to become accurate, or to see if there were any patterns that could be followed as far as learning how to employ those indicators. And so I did that for much of 2018. I ended up writing an article as part of a Syndicator Insights Challenge at the time. And so, I've for a long time, I was a pretty active member of the Syndicator community. Now, sometime later, Calvin joined the community, and I started working with him to test strategies surrounding EPS indicators that Syndicator was putting out. So earnings indicators based on specific companies and how they would perform during the earnings quarters. And so Calvin and I sort of worked closely to test a strategy around those indicators. And I think much of the mechanics that we used in those old days are still very relevant to Calvin's new strategy. But in any event, as is often the case, life got very busy for me, and I ended up moving, jobs around, and so it's been, about a year since I was actively involved with Cindicator, and so, like Calvin mentioned, I reached out to see if I could get caught up to speed on the new strategy, and I'm very glad to hopefully start to become a much more active contributor once again.
That's great. So, so Rex, do these topics kind of cover what you wanted to talk about today?
Absolutely, yes.
All right, cool.
And I'm very glad that we could open it up to everybody, and hopefully this will be very beneficial, not just for current macro sentiment subscribers, but also the trial members.
Yeah. So this is our agenda. I'm going to jump into what are the macro sentiments. Hey, a lot of you guys know this already. Just going to take 30 seconds. So the sentiment questions. These are the questions that Cindicator poses to their analysts on a weekly basis. They pose these questions on a Friday morning, I think, and they collect the answers on Saturday, and they post the results on Sunday morning when they give them to us. These are all opinion questions, sentiments. There is no right or wrong with the answers to this. How will the employment situation in your country develop in the next 35 to 65 days? Somebody puts in their sentiment, boom. No right or wrong. Syndicator poses the questions, publishes the results, and then I take the values, and the percentage changes from one week to the next, and I put them into my analytical tool that I've developed. And then based on my recipe of what combinations of sentiments go together, I analyze what happened in the past, and I match the past to the current values, and then I develop a prediction of whether the markets are going to go up or down in the coming week. Pretty straightforward. Now, when I say the markets, I'm referring to the S&P 500, where I use the ETF of the SPY, and the Russell 2000, where I use the ETF, I'm going to say SPY and IWM. So these are the two market indicators that I use when I'm creating my analysis. Large cap, small cap. So, that being said, now a reasonable question to ask is, all right, is the Calvin strategy any good? I want to share this with you before we get into the steps of doing it. Does the Calvin strategy work? There were 59 weeks of sentiment data starting from December 9th, 2019. Now, one could reasonably say the market went up all year last year. I probably could have bought a call every single week and made profits. Well, let's look at that, and let's compare that to the Calvin strategy. There were 59 weeks. If you had bought a call every week anticipating the market was going to go up, how many weeks had moves of 1% or more out of those 59? There were 43 weeks where the market went up by 1% or more. You probably would have made a profit if you bought a call on the SPY. The weeks that did not, so that means the weeks that did not move up, 16 were weeks that did not move up. You would have had 43 winners and 16 losers. That's a 73% win rate if you just bought a call every week because the market was up all year. Let's compare that to what the Calvin strategy selectively did. There were 59 weeks. The Calvin strategy gave an up signal, meaning that I think the market's going to go up. 46 times I signaled the market's going to go up. And it did move up. Of those signals, there were 42 of those 46 weeks, the market went up. So 42 signals were right, which means 4 of them were wrong. That's a 90% win rate. So if you had just bought a call every week, you would have had 16 losers and 43 winners. If you had followed the Calvin strategy that indicated if the market would rise, you would have had 42 winners and 4 losers. That's a 90% win rate. That's why I make the statement the CalStrat based on sentiments was much better. Now, I'm really pleased with how the CalStrat works, but the CalStrat is nothing without Cindicator's macro sentiments. My shit does not work if I don't have the inputs from Cindicator's macro sentiments. So all of this is based on Cindicator's work. So props to them. So, Calvin, you've got this Calvin strategy. How do we implement it? I want to share these steps with you because what I've developed now is very different than what we were doing in June of 2020 when the sentiments first came out. I'm not going to explain what the differences are. I'm just going to tell you what I'm doing now, and you're welcome to copy the approach if you want. So, how do we implement the Calvin strategy of the macro sentiment indicators? The first step, I'm not going to highlight that. The first step is you receive the Calvin strategy signal from me or my buddy Hobbs. It's going to be a signal that says the market's going to go up or the market's going to go down. What the Calvin strategy is doing, what I'm doing is I'm analyzing the past 59 weeks and I'm matching it to the current combination of sentiments to try to identify when did the market go up or down by 1%. And if the current signals match many instances in the past where that happened, then that gives me the confidence to say, hey, I believe the market's going to go up 1% this week. Or I think the market's going to go down 1% this week. That's the signal that I provide. And then you all can trade based on that expectation that it's going to go up or down. If it's an up signal, the Calvin strategy is expecting a rise during the week of 1% from the Monday open price of the stock. Now, the stock being SPY and IWM. And if the indication is that it's going to rise, we would plan to buy a call. If it's a down signal, then the Calvin strategy is expecting a drop in the SPY or the IWM of minus 1% from the Monday open price of the stock. In that case, buy a put. Now, I'm harping on this fact that it's the Monday open price. I don't care about the Friday close. I don't care about the gap between the Monday open and the Friday close. Everything the strategy is based on is measuring the opening price on Monday, and is there an expectation of a 1% rise or 1% fall from that point. So, signal comes out, it's to say it's going to go up. When the market opens, you calculate the strike price and the expiration to be used. Oh, you can do this ahead of time. The strike price that I use is 2% out of the money from the Monday open price of the stock. Simple to do. If it's an up signal, you take the open price times 1.02. That is 2% OTM out of the money. If it's a down signal, then it's the open price times 0.98. That's equivalent to a minus 2% OTM. That's the strike price that I'm going to look to buy when I buy the option. And the expiration is not this coming Friday, it's 2 Fridays away from the Monday. 2 Fridays out, 2% out of the money. Very important. The The reason I'm using that is because of the fantastic work that Balthius did in his data analytics, downloading actual stock, actual option prices over the last 59 weeks. And he showed that the 2-week expiration and the 2% out of the money gave the best bang for the buck. So I'm piggybacking on the great work by Balthius, and that's what I'm using. I'm going to pause there for a second before I get to what to do on Monday morning. And I want to encourage you, unmute your mics. And do you have any questions about what I've said so far?
I got a question.
Yes. Who's speaking?
Domo.
Okay, Domo, take it.
Hey, so when you say the expiration is 2 Fridays away, do you mean like the next week's Friday, essentially?
Yes.
Okay.
So for example, this Monday, I'm open up my calendar, which you guys are not seeing. The 18th was this Monday. The 22nd today is the first Friday. The 29th is the second Friday. So I would buy the expirations of January 29th.
Awesome. Thank you.
Sure. Any other questions before we go on to what to do Monday morning?
Yeah, I just had one quick question / comment. So in determining that 2-week expiration as well as the 2% out of the money, I guess, and I'm sure the community will continue to kind of monitor and see if those numbers continue to be the sweet spot. But I guess, in your opinion, would you think that those numbers would evolve along with whatever the prevailing market conditions are at the time?
It's a great question, Rex. I don't know. I imagine the data set that Balthius has created is based on the last 59 weeks that we have. And he drew this conclusion about 4 weeks ago when he had 55 weeks of data, which is a pretty big data set for this thing. Mm-hmm. And we'll continue to monitor it. And if it appears to Balthius, who's done fantastic work with us, along with Okidoki, if it looks like there's a change, then we'll be open to changing it.
Awesome.
So we've talked about these steps, 1, 2, 3, 4. You can kind of do that before the market opens on Monday. You can anticipate what it looks like the open's going to be. On Monday morning, during the pre-market, let's say the signal is for up and you plan to buy a call. Before you buy that call, check the MACD indicator before entering the trade. And I'm going to show you what the MACD indicator looks like in the next step when we go to some charts. But the MACD, I think it's moving average cumulative divergence, is a common indicator that's available on just about any charting website you're going to use. Only buy the call if the MACD favors entering the trade. We'll talk about in that more detail. But then also check whether the stock has moved up, whether SPY or IWM has moved up by 1% already before you enter the trade. Because if you're late to the party on Monday afternoon, and it's a call signal, and you're going to buy the call, and you jump in and buy the call, but the SPY has already moved 1%, then don't buy it. Because the only thing Calvin is indicating, the CalStrat's indicating, then it's done. Put a fork in it. Don't jump in. MACD, as you'll see when we get to the chart, MACD is going to help us with the entry very much. Then you watch the stock's movement. If it goes past the CalStrat strategy target, wait for another day. Don't enter the trade. Now, if it's a dual signal, which the Calvin strategy gives a lot, predicting both a rise and a fall of 1% or more during the week, calculate the targets and the strike prices based on the Monday opening price, and let the MACD show you which one to buy. Don't buy both at the open. Be selective based on the MACD. And then, if it's a dual trade, close the first trade before you open the second trade. You bought a call, let the call go up, let it trigger an exit, and then watch the MACD before you get into the second trade of the put. Now, how to get out of the trade. This section, point number 7, has been a topic of much discussion since sentiment started. We were so happy with getting 50%, 100%, 150% gains in a week that, people were thinking, when do I get out? When do I shovel the profits, in the immortal words of Drim Chu? Do I take 10% on a consistent basis? Do I take 20%? Do I, whatever? It used to be that there was all the conversation about setting take profits targets and using limit orders to take those profits. In my experience, that has not worked out as well as using a conditional sell order based on the price of the underlying stock. Now, I only discovered how to do this week. I've been trading the Calvin strategy on sentiment since June of 2019. I only figured this out now. I'm kicking myself for not realizing this was a possible strategy earlier. So, I think Rex made the point. Will we change if we learn more? Yes, we will change if we learn more. So a conditional sell order, here's how it works. Use that target price of 1% up or down as the trigger to sell the option. But the trigger is the price of the stock, of the SPY or the IWM. Think of it like this. Sell the option at its market price when the SPY hits the trigger price of X, whatever the target price is. You're going to have to check with your platform how to do that. Interactive Brokers offers it. I don't know who else does. I think E-Trade does. I think Greg S. discovered that.
Thinkorswim. Sorry to interrupt.
Thinkorswim, no, that's great. Thank you. Thinkorswim offers it. If your platform doesn't offer the conditional orders, get a different platform. It's that important. Otherwise, determine a take profit target that you're comfortable with and enter the limit order to sell at that profit. Okay, so these are the steps. Let's go to the charts. I'm going to show you how this works in action. I need to find, okay, this is trading view. Now, I do a lot of work with this stuff, and I visualize each week that a signal takes place, and I track it. And I'll just share something with you. This is going to be really complex. This is the last 59 weeks of me tracking each week and adding comments for everything that happened over the week. So I'm making you seasick by showing you all that. But now I'm going to come back to the current and just kick into this. So forgive me, I know I'm making some people sick. Back in the 30-minute time frame. I want to share with you how to do this Calvin strategy approach over a couple of weeks. Now, this is a chart that shows this week. Here's the open on Monday. On Tuesday, because Monday the market was closed. Here's the close that took place today. this is just the chart in TradingView. Down below, this is the MACD signal. Now, let's look at what happened this past week. The Calvin 2 strategy, the signal was that the market would go up by 1%. So in the morning, the market opened at 378. This is the SPY, by the way, which is the S&P 500. This is the ETF of the SPY. It opened at 378. Calculating 1% above that is 382. That's what this line represents. That's the target for the rise. But the call, the strike price of the option that I bought was 385. That's the heavy green line, because that's 2% out of the money from 378. Now, the market opened here. MACD is the signal that I've started to use that tells me when I can enter the trade. So on Monday morning, I'm looking at the MACD. Now, I'm not going to teach you all the details of how the MACD works. I'm not expert in it, but I've become very comfortable using it. If you want to become more knowledgeable, go to YouTube and search for videos by Trading Rush. In my experience, he has some really good stuff, and he's got some very good how-to videos on MACD and other indicators as well. So, short course is that if these two lines are going up, and if they're below the midpoint, then that's a pretty good indicator to buy a call. So since the signal is market's going to go up, and the MACD is looking really good, I went ahead and I bought the call. And then, immediately, I set my conditional sell order. And the conditional sell order said, if and when SPY hits 382, I want my option to be sold at whatever the market price is for the option. I set that order. Here, the conditional sell order was triggered. The call bought on Monday, the conditional sell order was triggered on Tuesday in the morning at about 10 a.m. because it broke through 382 and it sold. I got a profit of 78%. Done. Put a fork in it. I'm happy. Now, of course, SPY continued to go up. I don't care. I got the 78 without thinking about it, so I'm walking away. So that's a good example of how you use the Calvin strategy and MACD in a week where the signal was up. Any question? I'm about to show you how to do it when the signal is for going down. Any questions about this week that I just shared with you?
Are you only focusing on the 30-minute candles? Because I know the MACD changes depending on which time frame we're in.
It's a great question, Domo. I have found that the 30-minute candle is the most reliable for making decisions. Yeah, most reliable. But I definitely look at the 15-minute and also look at the 5-minute before I act. Sorry, I'm making you guys sick. I'm changing between the 5 and the 30. So I will look at the 5-minute, and here at the very open, the 5-minute chart, this is not a good place to buy a call. So this is the open. Here's 9:30. I'm going to make this a little bigger. Using the 5-minute, this would tell me to wait. Okay, I'll wait until here. This looks pretty good. All right, now I'll buy it. So I would have bought it at 11:55. I actually bought it at 9:45, which was here. Now, it's funny. This week, I was not going to trade at all because I was concerned about the violence that might come around the inauguration. So I published the signal on Sunday. I said, the signal is up for both SPY and IWM, but I'm not going to trade. That was my intention. But on Sunday, I was doing some research and I was starting to discover how the conditional sell order worked on Interactive Brokers. So I was on the phone with Interactive Brokers customer support. They were teaching me how a conditional sell order worked, but I did not own a call. So it was all theoretical. So I told them to wait a minute. I went ahead and I bought one contract so I could have a call option that I could set an actual sell order. So that's why I bought it at 9:45 when it was up here. Normally, I would not have bought it then because it doesn't look very good on the 5-minute. I would have waited until it went down and I might have gotten a better price. But I bought it here because I needed one to have in my portfolio so I could practice the conditional sell. So, but yes, Domo, I'll look at the 5, the 15, and the 30 when I'm making the decision. For the entry, I found that the 5 is pretty helpful. Any other questions?
I had one more question on this. So, just to clarify, so you're only paying attention to the MACD from after the open, right? Because if we look at if we look before, obviously at the open, it jumps up quite a bit. And so, are you trying to time your entry such that, say you get on and, the MACD is still trending up right at the open? Would you place the trade then, or are you going to wait a bit for the kind of open chaos to settle down?
Well, tell you what, let's use this as an example. This 5-minute MACD. I would wait if this is the open right here, that is 9:30. That is the open. I would not buy a call as this is going down.
Mm-hmm.
I would not buy it. When it came down here and the MACD starts to reverse, that's when I would jump in and buy the call.
I see.
Right about here.
Okay.
That's when I would do it. And of course, my next step would be, did the market move up while I was waiting? Did it move up past the 1% point? So I got to look at both things. Did that answer it, Rex?
Yeah.
Okay, cool. Any other questions before I go to the put example?
And I had one more last question,
sure,
too, which is to your point that you made that you decided to, before your Interactive Brokers call, you decided to sit out trading for the week just due to the political atmosphere. Is that something that is a recurring?
No.
Yes.
Great question. It's not. I've never done that before.
Mm-hmm.
I've never done it before. This was the only time I let my personal view interfere with the sentiments trading. And hindsight, I should not have let my personal view interfere. I should have done the trade anyway, because the call did work out great. Okay, let's go to a week where there was a put. This was a week the open, the signal was that the market would go down. That's what the Calvin strategy said. And after the open, I'm going to go to 15-minute because that makes it a little easier to read. To make it a little wider. The open was here, and the signal was down. So looking at the MACD. So I'm sorry. So I'm getting ready for this, right? This is the open. I calculate what's the minus 1%. Minus 1% is 374. This is the target. My 2% out of the money is 370. So that's the strike price of my put. This is the target for the market to move down. This morning, I see on the MACD that the market's going down, and then so I do not want to buy a put when the market's on the way down because it's already exhausting the downwards, and I'm not going to buy a put here because the market's going up. This is not a good time to buy a put, so I'm going to wait. I'm not going to buy a put at that point. But let me tell you, if you had bought the put at the open, you would have paid $3.76. Keep it on the back of your mind. That is what you paid at this time. $3.76 is what it cost here. Then you proceeded to lose money because the SPY went up. Then you proceeded to lose money because time was running out. Here we went into profit a little bit on that put. Here it went into loss a little bit because of the price went up. If this, by the way, by looking at the MACD, this would be a great time to buy the put. MACD has come up. It's kind of signaled. Now, I'm in a 15-minute time frame, and I'm Monday, Tuesday, Wednesday into the week. I'm going to switch over and look at the 30-minute MACD as well before I make any final decisions. And when I look at the 30-minute, this is the 30-minute. That's also pretty favorable for a put. The call, it's going up, it's up, starting to trend down, bingo. I could buy the put here, or if I don't want to hold it over the weekend because it's a new entry, I'll wait, and this would be a good time to buy it as well. So I researched the price in Interactive Brokers, and if you had waited for this MACD, if you'd waited for this MACD and you bought the put here, you would have paid $2.40. And then when you buy it, you enter a conditional sell order to sell that put when it hits the trigger of 374. Now, I remember this very clearly because last week I owned puts and I was sweating bullets to see if the puts were going to be profitable or not. I was losing money all week, Monday, Tuesday, Wednesday, Thursday. But I kept telling myself, Calvin's strategy is right many more times than not. I think I'm going to hit that target on Friday. Lo and behold, on Friday, it gapped down, and then at 10 a.m., big red candle went through the 370 strike, and that put, that 370 put sold for $4.15. So if you had bought it on Monday, you would have paid $3.76, sold it for $4.15. That's a 10% profit. If you had bought it when MACD was the best, you would have paid $2.40 and you would have sold it for $4.15. That's the power of using MACD for entry and conditional sell for exit. I would never had sold this properly myself if I didn't have the conditional sell in. So, because this candle, this lived for like 5 minutes. This drop, it went down, it went immediately back up. If you didn't have that conditional sell in, you would never have caught it. Questions, comments about that? What do you think? What do you say? What do you ask?
What would you have done if the SPY price did not hit the target price? Would you have held the position for the weekend?
Great question. I would this put that I bought had this expiration. I would not have held it until the next week. If this trade does not work by the close of Friday, I'm getting out on Friday because I don't want to hold it over the weekend. I don't know what the signals are going to be the next week. And this is a perfect example. This is why you would not want to hold it, because the signal the next week was for a call. And you can see what happened. The market zoomed up. This put was worth a lot less on Monday than it was on Friday. So I buy the 2-week expiration because at this point it still had some value. That's when I would sell. Does that answer it, Domo?
Yeah, thank you.
Sure. Rex, did you have a question?
So I just had a quick, small question, and maybe this is just because I'm unfamiliar with, what it's like to trade using MACD as an indicator. But I'm curious I'm curious how you go about perceiving the direction in real time, right? Because obviously we can see here.
Well, yeah, in hindsight, it's easy to see.
Yeah,
right.
We can see in hindsight, but can you speak at all to how you view the MACD in real time, where we don't have a view of where it's precisely going?
That's a great question. It really is. And I'll tell you, I will. Let me see if there's a way that I can. I've been using MACD pretty successfully for the last few weeks. I've been familiar with it for a long time, but I've only been depending on it for, I think, the last 3 weeks. And the way that I'm using it is, let me see if I can use this as an example. This is a great example of a time that this looks like the rise is getting exhausted. And when there's that tick down, at this point, this is when I'll buy the put, because it's starting to get exhausted. Sometimes this doesn't work, but more often than not, in the long run, this is effective. Now, this is the 30-minute. I will also use the 5-minute to give me an immediate signal. I think, let me get back to the put. So we were talking about this moment. This was the line on the 30-minute when I would have bought the put. In the 5-minute, at this point, it's already gone down, and we're in the red. We're in the lengthening down bars. So the 5-minute really confirms it. Well, the 5-minute would be the 5-minute confirms it. We're looking at a 30. Well, let me look at the 5. Okay, 5 says time to buy the put. So in real time, I will, and I have done this in the past, I will jump in on a put when I see this change right there. Likewise on the call. I will, if the signal, let me see. Okay, Rex, does that help?
Yeah, that helps a lot.
Let me see if I can also make it apparent in the prior week. Remember how in this example, this was the up signal. And let me delete these. This is the 5-minute chart. This is the up. I would not buy a call when it looks like this. But when it comes down here, truth be told, I probably would have bought the call at this point when it had started to reverse. And then it would have gone up, and then I would have freaked out because it started to come down. But I would have told myself, no, I think I bought the right thing, so boom, that's what I would do. I'm not going to wait for this. Some people will wait until it's confirmed, until it gets above the midline. That's fine. But I would have jumped in earlier. Any other questions?
Hi, Calvin. This is Eva. I have a small question. Are you actually able to do it successfully simultaneously for SPY and IVM?
Oh, yeah, it's tricky. You need to multitask. Um, you know, in the real, because yes, the answer is yes. Because I will have
Okay.
two charts up. I'll have, in my trading view, I've got one tab for SPY, and then I will load, I'll show you. I'm going to load my IWM. And I've got this marked up too. So I'll have this open and I'll just go from tab to tab. And that will help me figure it out. So everything I'm talking about for SPY, this applies to IWM too. But you're right, it's not easy to do. And when it's a dual week, it's even trickier. So one more chart I wanted to share with you was a week when the Calvin strategy signal was wrong. Remember I said there were 46 call signals and 42 were correct? There were 4 that were wrong. This week is one of them. The week of 12/28 to 12/31. But even though the Calvin signal was wrong, it could have been possible to make money. And this is what I'm going to share with you. Let me get into a 30-minute view to give you a big picture. So this is the week of December 28th. The Calvin signal was up. The market's going to go up. Opened at 371.80. The 1% target is 375. The 2% out of the money strike price is 379. So getting ready, I would say, okay, that's the target. That's my strike. But then I look at the MACD and I would not buy a call when the MACD is up there because that's already gone up. I think I've missed the boat. So I would not buy the call at this point. I would watch it. And here it's coming down. Here it's coming down. This looks like a nice entry point. So I would probably buy it here. Because that is a good MACD. Now, I'm being aggressive. This is an assumption on my point. I see it starting to go up. I'm going to jump in because I'm an idiot, and I'm going to get that call now. A more reasonable person might wait until not hold over the weekend and might wait to get confirmation that it's going up and buy it here. Now, this is a 30-minute. I would look at this in the 30 and I'd say, okay, what does it look like on the 5? Because I like to use the 5 to confirm what I'm going to do. And on the 5-minute, this MACD looks really good. On the 5-minute, truth be told, I would probably have bought it here because that's when it really started to go up. And if I did buy it at this point, when I'm sorry, I'm trying to get this marked. If I bought it at this point, when the stock was at this price, remember my target was 375, 1% target. That's where I think it's going to get to. And my 2% is out of the money there. Because the market has come down and because I'm starting to run out of time, this is one day into it. In hindsight, I don't know that I would buy my 379 out of the money. I would probably buy a target that's a little lower than that, like 377, or even at this target line. But I would be confident, hey, I believe I'm going to hit this 1% rise target. So if I did that, if I bought the call when the SPY was at this price, let's see, what was the rise? At this point, SPY had gone up. I don't know if you can read that. That's 0.85%, went up 3 points from here to here. So that call would probably be in profit at the end of the day on Friday. And I'm not going to hold it to the next week because I've got the 2-week expiration. I'm going to get out of it at that point. That's the benefit of using the MACD for the entry. Realistically, I probably would have bought it here. Because look at that on the 5-minute. So ask me some questions about this. How to make money even though the signal failed. Does this make sense at all?
Yeah, that makes sense. Let's see. Actually, just to chime in here also on some of what I saw, back in 2018 using Cindicator's indicators. This was something that I saw actually, even with the crypto and the other indicators that come in through the Cindicator bot, is that even, many times when the targets themselves weren't reached, the assets in question would come very, very close to the target. I'm talking like within 0.1%. And so, I'm not surprised to see that even though the target wasn't reached, it's potentially still profitable.
Because this is how high SPY got that day, 374.64. It was 36 cents away from the 1% target. So, anybody else have any questions or comments? If you think I'm full of shit, please tell me. My wife does all the time.
I definitely think, just sort of an open comment here. I think that, this is looking, very promising, and I think, the analytics that you guys have, that you and the community have done so far, I think if we were to do some additional analytics on, for instance, we can take a look at, on average, how often in instances where the targets aren't reached, how close do they come? And then we might be able to actually come up with evolving targets.
Actually, the Baltheus data on the actual prices of the options has shown that in weeks where it doesn't hit the target, the option was still profitable at some point. Mm-hmm. And that's with his real option data. So the MACD for the entry and the conditional seller for the exit makes a big difference. For me personally, I think it's going to lead to much greater profits and consistent profits and success. Mm-hmm. I am going to switch the screen back over to I'm going to put many of the people have been helpful in this effort. And I know I don't have everyone's name up here that I should. I just kind of threw these names up here, but they've all been super helpful. So let me open up the mic and let's just take a few more minutes if there's any questions at all that have not been answered yet.
Yeah, I've got a simple one. So I've seen on Sunday. I think I've been like a paid member now for a short amount of time, but I've seen on Sunday the Cindicator macro sentiments come in. Where do I go to see the Calvin indicators?
Good question. Well, what I do is in the Calvin strategy signals. Yeah, in the Discord, go to Calvin strategy signals. That's where I post the trade. Mm-hmm. But I also put the signal in the Calvin strategy discussion. Mm-hmm. And I'll put that up there at some point on Sunday. All right, cool. Then let's put a bow on this and wrap it up. Thanks a lot for listening. Thanks a lot for participating. Hopefully, Karina, thank you very much for recording this. Mm-hmm. and now we'll figure out how to make it available offline.
Mhm.
All right, cool. I'm gonna sign off and go have a beer.
Perfect.